All right. So today I'll explain you again the candlestick patterns which you have requested for.
Yep.
Inverted hammer, bearish engulfing, evening star, dark cloud cover, bearish harami, hanging man, hammer, and bearish marubazu. Okay.
Yes, and piercing is that there as well?
Pershing you have not written, but I'll explain you.
Okay. Okay.
Okay. So let's go to any chart, for example, Aussie US in daily, and change this to candlesticks and make the width as 2. So candlestick in front of of or anywhere must be seen with all respect to context. Without context, candlestick can be really useless, absolutely useless. So that is why context is so important. And I maybe I'll repeat this context, or may not be repeating, but the context is constant. Context is constant for for bullish candlestick. The context is it should appear after a downtrend, and this is a downtrend in front of you. And for a bearish candlestick, and it's and must it should appear at a support. So this is the support, which is the floor, and probably this is the resistance, which is the top. So any resistance lines which are there from monthly, from yearly, like this in front of you, coming from yearly, this is coming from monthly, this is coming from monthly, or quarterly, even like this one is coming from quarterly, this is monthly, and so on and so forth. So once you have those lines we'll be seeing the candlestick. So first of all, to the left hand side, let's go to the last candlestick, last bar or last candlestick, and see what is happening. Left hand side is always known, but right hand side is never known. So that is what is trading is all about. Left hand side is
Okay.
always known,
So we're
and we
always
take it.
looking to the left.
Yeah, always
Okay,
to
got that.
the yeah, always looking to the left, and we are taking decision based on the left side. So this the left hand side is bearish, yes or no?
So that's there.
Yeah, left hand side is bearish.
Yes.
And for forex, because we have started with forex trading, any movement beyond 5% is good enough for us to do a little bit of correction or reverse completely. So let's do the we can go to the scale, and we have all these lines. I hope you have these resistance and
Yes.
support
Yes.
lines which are drawn from yearly, quarterly, and monthly.
That's
Okay.
right. Yep. Got that. But
Once you have this, we'll start from this top. Recent top is 30th September to 2024, when the high was 6942, and the recent bottom is this one, which is the low on 10th of January, and the low here is around 6138. So that's a fall of 11%, if you can see.
yes.
So I told you 5% is good enough, but unfortunately, Aussie came down 11%. So that is good for us. So context is downtrend, we satisfied, and near a support, satisfied. Near a support, it can be Fibonacci support, which we'll explain in the next
Uh,
chapter.
So so sorry. I'm not going to be able to pronounce the next chapter. The Picasso. I'm just going to call it Picasso, right?
Hmm.
Anyway, so just to recap on this, are we talking about bearish candlesticks right now? So not bullish. It's
Bullish.
in a
We are,
downtrend.
we are
So
looking for
bullish.
bullish.
That's
We are
right.
looking
Okay. So bullish candles will only appear
after
at
a
support
downtrend, after a
and
downtrend, and at a support.
after downtrend and at support. Okay. That's
Okay.
important. That's the context, right?
Yeah, that's the context.
And bearish is directly opposite.
Bearish directly opposite. Bearish should appear at the after a bullish trend like this one in front of you,
And at resistance.
and at a resistance.
Okay. That's important. Cool.
That's very important. Okay. So bearish candlesticks should appear at a resistance after an uptrend and preferably at the top right hand corner of the chart. Preferably, not always, maybe at the top right hand corner of the chart. Okay.
Okay. Because we and just before we go on there, what I was finding in the chart, the weeklies were quite interesting. There were not necessarily that many candles, candle formations. On the
We'll go to
dailies,
that.
yeah.
We'll go to that weekly.
Okay.
Just park this one. Let's clear the candlestick
Okay.
first. Okay.
Okay.
So if we start from here, which is dated maybe from here, which is 25th of September, 25th of September 2024. So the first thing we need to see whether it is coming after what is the trend. This trend in the left hand side is up or down. You tell me.
Yeah. So that's the uptrend.
That is uptrend, and this is this, resistance. Yes or no?
That's the resistance. Yeah.
At 6900, and this resistance is coming from monthly.
Yeah.
And we
Where is it? So,
saw
no, sorry, monthly. This is a daily one.
month. See this month. The line is from monthly.
Oh, the line is monthly. Sorry, but this is a daily chart.
Yeah, this is a daily chart. Line is from monthly, and this is also this is from yearly.
Okay.
So we saw before that we saw one yearly and one monthly resistance, correct?
Yes.
But there is no bearish candlestick here. So we'll go to the next one. There is no bearish candlestick here, but this one is a definite bearish engulfing because it is appearing after an uptrend and at a resistance, and the body of this one has engulfed the body of the previous blue candle. So the red candle body has engulfed the entire body of the blue candle. So that is a bearish engulfing.
Must engulf the prior candle. Okay, so mine is red.
Bearish
Prior
engulfing.
green prior green candle.
Hmm.
That's me. I won't worry about that. Must engulf the prior candle. And the second thing is it opens at less.
The red body engulfs the green body.
Yeah, what I was finding very interesting though is that with the bullish one, sometimes the price will literally be one pip different.
Yeah, absolutely, 100%.
So I'd always hover. I'd hover over the red candle. Make sure that it opens. At high. Is it higher than the close or lower than the close?
No, it doesn't matter. Generally, the close of the previous green candle and the open of the red candle should be same. So this close is 6898 on the green candle, and this red candle opens at 6898. So they should be same.
So all the Google information I was reading it's saying that it's either at the same or more.
Same. In Forex, it is same.
And it has to be the same. So if it's not the
No,
same,
no,
and
no. There is no has here. It is. It is. The fact is, in Forex, 99% of the time, the close of the previous bar or candle is equal to the open of the next candle, unless and until there is a gap.
Okay.
Because Forex market is 24/5, there is no gap. And the Google, whatever you have researched, mainly written for shares or stock trading.
Okay. So but I thought though it needs to form a gap, otherwise it won't have the ability to engulf.
No. Generally speaking, like this one here, you saw 6898 close and you saw 6898 open. So similarly, this one is an engulfing at a resistance after an uptrend. This is also an engulfing at a yearly resistance because this close is 6797 and this open is 6797. Okay. So that is a bearish engulfing in front of you. This is also a bearish engulfing in front of you.
So my question then is, it has to feel on an uptrend. So that's cool, got it.
So this
Um,
is the uptrend in front of us. This is the uptrend,
yes,
and this is
yes,
the uptrend.
another uptrend. So there's two of them, but they have to open and close. All I've written here is open and close needs to be the same.
You don't bother about the open and close. You just see visually whether this red body is engulfing the green body, yes or no. Whether this red body is
Okay,
engulfing this green body, yeah. It is. Don't
okay.
make
So
it.
that
Don't
yeah,
make it
so,
complicated.
okay, that's really really that last part is super helpful because I actually saw a bunch of them, and I was going through the decimals, through the pips.
No,
Yeah, and
no. I would
but
say
what you're
visually.
saying,
I would say visually. I would say visually.
yeah, so you don't have to hover. I just
No,
basically look at
no,
it and go, you know what, it's probably going to be. It looks
no,
engulfing, so it is engulfing.
no. We don't have to.
Okay, all right,
So
cool.
if we have understood this is also an uptrend here, and this yearly resistance is a deadly one. This yearly resistance is a deadly one, and at that deadly, because yearly resistance is very important, and sometimes price may go up to exactly, or it is very near. Like this is very close to the yearly resistance. This is also very close to the yearly resistance. Okay.
Okay. No, that's enormously helpful because I must say it took about two or three. I've done two or three candles with all of the all eight charts, and it's taken me days because I've gone over every single candle and gone calculated to
No,
the
no, no, no.
absolute pip.
I
So
think you're
okay,
going. You're making it a little
amazing,
bit difficult.
amazing.
Mm.
I'm happy with that, Partha.
Yeah.
Make it easy. Less is more.
Yeah.
Okay,
So if
cool.
we cannot force price to go always hit the resistance. We cannot force price always to hit the support exactly. No, it is not possible. So that is why we have a proximity. We have a proximity. So if it reverses near, at or near, we always say at or near, at or near,
Okay.
then it is fine. Like this one here, which is coming after this uptrend, and then we saw an inverted hammer. What is an inverted hammer? Inverted hammer is just the opposite of the
It's
hammer.
a, it's an upside down hammer.
Yeah, upside down hammer.
So with the hammer, I was actually getting it doesn't need to be perfect necessarily. It's just it doesn't need to be at the tip though, does it? Or does it need to be close to the tip?
The close,
Or
yeah,
the
the close. The definition of the hammer should be like this is a hammer in front of you
yeah.
after a downtrend.
But what about the other one and the two to the right?
This one here,
Oh no, it wouldn't be two to the right. So no. So if I look at the hammer, you see the one that you've pointed out,
this one,
and then two to the left,
this
the
one.
green one. That one is that a hammer?
Yeah, that's a hammer, but it is having too much of upper wicks.
Yes. So would that be a hammer? Or is it not a hammer?
I would not expect this to be hammer because it is, first of all, it did not touch the support. That's fine, but also it is having an upper wick which is not correct. Hammer should not have upper wicks.
Okay. Okay.
Hammer should not have upper wicks. Write it down, or a very small upper wick.
Right. So hammer. Uh, hammer. So hammer must not have upper width.
Or a very small upper wick.
Must have upper width. Family small.
Yeah,
But then the inverted hammer is just the opposite to that.
opposite of the
So
hammer, and it should not have much of lower wicks.
a lower width
So inverted hammer should
and
appear after an uptrend at a resistance.
uh, yeah. So it appears after uptrend, hammer.
And at a
Sorry,
resistance.
downtrend. Yeah. After the hammer appears after downtrend at
Yeah,
support
yeah.
and
And it should not
inverted
have
hammer.
upper wicks.
Yep, I've done that.
And then
Here
inverted hammer
after
should appear after, inverted hammer is the opposite, should appear after an uptrend at or
up
near the resistance, and it should not have lower wicks.
near resistance. Cool.
Okay.
Yep.
So we cleared hammer, we cleared our understanding on inverted hammer, we cleared our understanding on bearish engulfing.
Yeah. Bearish
We have,
and bullish. So that's
yeah, I will talk
four
about
candles.
bullish. In front of you, these are the scenario in front of you. Okay.
All right. Bearish engulfing. I'm just writing this down before
Mm.
I refer back. So that's the bearish. So bearish engulfing is a red bearish after
Candle
follows is
after
after
an
a
uptrend,
green.
after an
Yeah.
uptrend at a resistance.
Here's after uptrend. So
At
that's
a
the bearish one.
resistance.
Yeah.
Yeah.
After downtrend. At support. Come on, Andrew. And I've got four screens open. My mouth, I'm keep on losing my mouth. Appears after uptrend. At
At a resistance.
okay, cool.
Okay.
Yep, that's right. Bearish engulfing. Bullish engulfing.
So let's say bullish
Cool.
engulfing.
Yep. So there's one over there. I can see it in November 06.
November.
Yeah, so November is that one there. Is that bullish? Bullish engulfing.
Yeah, this is bullish engulfing. Yeah, but
So
unfortunately, it is not appearing at close to the support. So it is not very close. Close means a little bit closer. This is appearing too far.
okay. So
This
it's
is
too
appearing
far. So we wouldn't call that a bullish
no,
engulfing because
no,
it's too far away from support.
too far away
Got it.
from the support.
Got it.
So let's see any bullish engulfing in front of us. So okay, there is no. All right. So very good. This is also a extreme example. For example, this is downtrend. Yes.
Yeah.
And after a downtrend, so we see this is a downtrend, this is a downtrend. So after a downtrend, we see that this big one, this big body green has engulfed this small little body. This is also a bullish engulfing.
And that's a so what I've noticed when it engulfs the previous candle by a lot, like
Mm.
that has totally smothered it. Normally the gains are quite good.
Yeah. So this is bullish engulfing. This is bullish engulfing.
Okay.
And after that, in an uptrend, when it is going in an uptrend, in a going uptrend, and we saw at a resistance, we saw this red body has crossed the big green body midpoint, then it is a dark cloud cover.
Okay, so the dark cloud cover. So I just got distracted because somebody was trying to call me. So where I lost you was the bearish engulfing, and then you moved to dark cloud cover. Where is that?
Yeah, this one here.
So why is it a dark cloud cover? What is the definition of dark cloud cover?
Okay, the definition of dark cloud cover is it should appear after an uptrend.
After,
After an uptrend,
yep,
that means higher swing high, higher swing low,
higher high. Sorry, higher high,
higher swing high, and higher swing low.
higher uh, swing low. Okay, higher swing high and higher swing low.
And at a resistance,
And after this, okay.
we'll see a big body green candle, and then we'll see a relatively big body red candle, and the red candle has to close below the midpoint of the green candle.
Okay, must close below
Below the
roughly
midpoint of the green candle.
below the midpoint of the green candle.
And how to calculate the midpoint is very simple. You just go here and do calculator. Open the calculator and then keep the cursor there and just add the open and the close without the decimal, divide by 2. So the open is 6340, close is 46402, equal to 12,742 divided by 2. So the midpoint is 0.6371. 0.6371. You agree?
I'm just looking at that again.
So open plus close divided by 2.
Open plus close on the green candle only, right?
Hmm. Hmm.
Okay,
Because
so
we need
one
to know the midpoint. Because we need to know the midpoint
got
of
it,
the tree.
got it, got it. Okay, so that's we were looking for the midpoint of that. How successful a dark cloud cover? So I've seen Andrew Staples one, and it wasn't that successful.
So the midpoint is 6371.
Yep.
And the next candle must close below 6371. Let's see what is the close of the next candle.
Okay, close is 6356.
Which is less than 6371.
Right.
So that is a dark cloud cover. And why it is not an engulfing? Because this body has not engulfed the previous
No,
body.
no. So it's not engulfing.
That
I
is
actually
the
looked at that. I thought maybe that's a bearish. I always get confused with Mobazu and Harami.
Harami, bearish Harami, also you bearish Harami. Bearish Harami is a small candle. But dark cloud cover is a big candle.
Got it. Okay, got it. So,
Okay.
and that's really the only difference. The dark cloud cover is actually quite similar to bearish Harami.
Yeah, but the Harami is a very small candle. Let me show you one example of a Harami so that you know it quite easily.
There's one over there.
Like this one here is a Harami.
Okay. And now
So
what if
the inverted
what if
Rama,
the
after this is a Harami because this is a Harami, bearish Harami, because this is a very small body compared to the big body. Like this one is also Harami here. There are many Haramis here. So this
so
is
I
a
can
Harami
that
here, and
yeah, I
that
was gonna
is
say that
also
one's
a
definitely one.
Harami here. Yeah. So Harami, Harami, Harami. There are three
And then
Haramis.
again on the August just above August 08, there's a Rami there. Now August 08. Yep.
So this is no, that is a mistake. We must not see a bearish Harami at the near a support.
At or near support.
Yeah.
Or so the bearish
This
Harami.
is not a bearish Harami, although the definition matches, but the context does not.
Right. I was actually looking at the one next to it. So it's at or near support. But I thought so bearish Harami with the red candle, which is bearish. I thought that needed to be by resistance.
Yeah, this is the one. So this is a red small candle after a big body, and this is also a red small candle after a big body, like a pregnant lady. So this is the baby, this is the mother, this is the baby, this is the mother, this is the baby, this is the mother.
Okay. Okay. So I think we just covered that one too. That's awesome.
So bearish Harami should appear after a resistance.
Bearish Harami appears after resistance or after
uptrend and at a resistance, after uptrend at a resistance.
Okay. Red candle must be
very small compared to the previous green candle.
Smaller than green. I'm just going to put in bracket larger red candle refer to dark cloud color.
Yeah.
Okay, cool.
Okay. So this is Harami, this is Harami, this is Harami, very small red candle, but this one is a dark cloud cover.
That's a dark cloud cover because the candle is too big.
Yeah, awesome. Very big. Okay. So we talked about dark cloud cover, we talked about Harami, we talked about bearish engulfing, we talked about hanging man. Do you have any question?
So a couple. So bullish Harami. It's just the opposite of the bearish Harami. Must appear.
We'll go to the bullish. We'll go to the bullish. Don't worry. We'll first complete the bearish.
Oh, okay. Yeah, got it. Okay,
The first
cool.
complete the bear. Okay.
Yeah, bearish Shirami, I'm comfortable with that. Dark cloud cover, comfortable with inverted hammer, bullish engulfing, and bearish engulfing. It's very comfortable.
So now bearish evening star. Bearish evening star should appear after an uptrend at or near or at a resistance, near at resistance, and the third candle must close below the midpoint of the first green candle. These candles can be real body or can be star also. If this is like a star, like a doji, doji, this is a star like a doji. But all important is this close is below the midpoint of this one. So this
Close
is
is below,
an evening
below
star.
midpoint. Close is below midpoint. I was just trying to catch up there, Pastor. Sorry. So
Yeah.
evening star, close is below midpoint. It must
Of the
appear on an uptrend.
close of the third bearish candle, close of the third bearish candle, close of the third bearish candle must be below the midpoint of the first bullish candle.
Right. The close of the third must be
Close of
below.
the third red candle, right this way. Close of the third red candle
Yep.
must be
Yep.
below the midpoint of the first green candle.
Of first green candle. Okay. Cool.
Okay.
Close of the third red candle must be below midpoint of must close
Yeah.
below midpoint of first green candle. Okay.
Correct. Correct.
And must it appear on an uptrend?
After an uptrend at a resistance.
Is yep.
After an uptrend at a resistance.
And at resistance. Okay. So this is where we look at it and go, there's a great chance of going short here.
That's exactly correct.
Okay. Cool.
Okay.
Cool.
So mostly we have covered all the bearish one, inverted hammer, bearish engulfing, evening star, dark cloud cover, bearish harami. We have covered everything except hanging man.
Yes.
Hanging
So
man,
hanging man or hammer.
hanging man is the hammer at a resistance. Hanging man is the hammer at a resistance. So if we see a hanging man, let's see another currency pair, for example, euro.
Yeah.
They are not very common. So hammer at a resistance. This is an inverted hammer, but hammer at a resistance is a hanging man. Like this in front of you, this is a hanging man, but they should appear after an uptrend. Uh,
Yeah. So I saw a few of those as well, and if it's appearing during a downtrend, then it's not. We don't worry about it. It doesn't
yeah,
matter.
like this one. This one
Mm.
is a harami first.
Yeah.
First one is a harami, bearish harami, bearish harami.
Yeah.
Bearish is always red. We call it, we make it red. And this one is a hanging man. The man is hanged.
Yeah. And then the next one is a hanging man as well, but the wick looks like it's too big.
Yeah, no, this is not a hammer because it is having upper wicks.
Yes. Yeah. Too much of a upper wick.
Yeah.
Okay.
So
You say that they're not that common?
that is no, yeah. Hanging man is not that common.
Okay.
Hanging man is not that common. So in front of you, we have a hammer and an hanging man at a resistance.
Brilliant.
Let me find out any other if possible. They are not very common. And not there is nothing there.
Okay.
So hanging man, just put the hammer at a resistance. Just put the hammer at a resistance, you will get a hanging man.
Okay. So
Allah, this is a very good one. This is a very good one. So this is a hammer at a resistance. Hammer at a resistance is a hanging man. Yeah.
so another name for hanging man is an inverted hammer. Am I correct?
No. Inverted hammer is hammer inverted, like this fellow. Hammer inverted is at this fellow. So inverted hammer is this one. Inverted hammer is this one. If there is a
Oh,
resistance
okay.
here, if there is a
So
resistance here,
so
then
hanging man is a hammer.
yeah, hanging man is just a direct
Okay.
hammer at a resistance.
I've gotten this all this wrong then. Okay, so
Yeah.
that's cool. So hanging, I'm just making sure. So this is hanging man.
Hmm. Hanging
So
man is a hammer at a resistance
yep. So it appears after an uptrend
after an uptrend.
resistance.
And if there happens to be a resistance and we saw a inverted hammer, then it is this fellow is an inverted hammer.
Just 2 seconds. I'm just making sure that I've got this right here. So let me go. What?
And this is coming from quarterly.
Yep. Okay. So I'm just making sure I've got my madness right here. Okay. So a hanging man, or otherwise known as a hammer.
Hammer.
Yeah.
Hammer
With
is hammer at the bottom. Hammer at the bottom, hanging man at the top. That's it. Same structure. Same structure.
sorry. Beg your pardon. I'm just trying to catch up here. So hammer hanging is a hanging man, and that's a red candle.
No. Other way around. Hanging man is a hammer at a resistance. Hanging man is a hammer at a resistance.
Doesn't matter whether it's green or red.
Doesn't matter.
Okay. All right. Doesn't matter. Okay. Matter when whether it is green. It is green or red. And okay, could you just point your cursor over hanging man again?
This
Just,
one hanging man.
perfect. Okay. Hammer at the top.
Hammer at the top is hanging man, and hammer at the bottom is a hammer. Simple.
Yep.
Hammer is at the bottom is a hammer. So this is a brilliant morning star. This is a brilliant morning star in front of you.
I think I got that one actually.
This is a brilliant morning star in front of you. After a downtrend, so this is appearing after a downtrend and at a resistance. So this is the downtrend. This is the downtrend.
No,
This is
morning
the
star
downtrend. And at a resistance,
appears after uptrend, downtrend. Sorry,
after downtrend at a resistance.
at resistance. I mean at support.
Sorry, at a support. My mistake.
Yeah.
After
And
a
at
downtrend
or
at support.
near. Just give me, yeah. Don't confuse me, please.
Yeah.
Okay. Cool. The morning star appears after downtrend and at or near support.
And the close of the third green candle must be below above the midpoint of the first
Green candle must close
above the
midpoint
of the
of the first red candle.
correct, like this one here. This is the midpoint, this is the close.
Okay.
And this is a beautiful hammer here.
Where's the
This is
hammer?
a beautiful hammer. Although it is not exactly twice the body, but this one, both of them are quite good.
So both the red one, that's is that a downtrend? It wouldn't be a downtrend though.
This one, the downtrend is still continuing, and
Yep.
we are at a support. This is not an excellent example, but it is not a bad one.
You're right.
I'll show you. Maybe if I get an excellent example, I'll show you. This is an excellent example.
Okay, so that's the hammer.
Support. After a down.
I'm getting ready. I keep on getting myself confused with hanging man, hammer, inverted hammer. So when we talk about inverted,
hanging man and the hammer are the same structure. Structure-wise, they are the same.
Hanging man and hammer are exactly the same.
Yeah, but hammer should be at the support. Hanging man should be at the resistance. Like if there is a resistance here at
I'm deleting it.
128.
Yeah, I keep on going back to this. Sorry, Parth. I feel like I'm really stupid at the moment. I'm getting really confused because what I'm hearing is hanging man is a hammer, but then there's
No,
different.
other way around. Hammer is a hanging man at a resistance.
Okay, hammer is
Hammer is a hammer at a
hanging man.
resistance.
Okay,
Hammer at
appears
a
after
resistance is
uptrend
hanging.
at on. So I've got my notes here. Hammer is a hanging man. Appears after uptrend at or near resistance.
Correct.
Must not have an upper wick. Can be small.
Correct.
And then I've got inverted hammer. The inverted hammer appears after downtrend at support. Must not have a lower wick, but it can be small.
That's correct.
Okay, cool. Now I've got it. Okay, that was annoying me because I kept on getting all confused, but I'm good now. Okay, sorry. Morning star. I'm
Yeah.
now the documents that the candlestick spreadsheet we're using. There's not a lot of evening stars or morning stars. They appear every now and then, but when they do, they're really successful.
Yeah.
Okay. Cool. I think the one that Andrew Stapleton put together
128.
had they had eight different he's doing gold as well.
So
Actually, yeah.
we discussed everything of the
Yep.
bearish, and this is in front of you is a hanging man at a resistance from that midpoint of the big candle.
Cool.
Always, yeah. So this is a resistance here, and this hammer at a resistance. Hammer at a resistance after a little bit, even if it is a little bit of uptrend, little bit of uptrend, little bit of uptrend. So this is a hanging man, and this is a hammer. Although they are same, but the context is different. This is support. This is
Okay.
resistance.
Okay.
Okay.
So yeah. So when I look at this, just being pragmatic, the hanging man, at the top of the uptrend there is red. So we can expect a downtrend
Correct.
from there.
Correct.
However, when it's a green and it's appearing at the bottom of the downtrend, we can expect an uptrend from there.
Correct.
Okay. So
So
that's an interesting hammer there because I can see two hammers at the bottom of the downtrend.
that's correct.
So you've got two in a row. The first one suggests an uptrend. Second one suggests a downtrend. So I would look at that and go, that's a risky investment.
Yeah, both of them are a hammer here.
Yes, but am I right? I would start investing. I would look at the. Is that yeah? I'd
Either you
look at a
can
little
go
bit
long here on the hammer, or you can go long here on the engulfing.
in the engulfing. Yeah, that's what I was going to suggest. I'd wait. I was finding this quite a lot in the when I was looking at everything and saying, well, the hammer might not be a defined reason to invest or not. Maybe wait a couple of days when an engulfing or bullish engulfing appears, and then I invest at that point.
So best thing is back to back, back to back. Like this is a harami here, and this is a harami and hanging man. So this is a harami here, this is an engulfing here, this is a morning star here, and engulfing. If you see back to back many pattern like we saw here and we saw here, they are good, very good. Back to back patterns are extremely good for candlestick.
Okay, cool, brilliant.
And we have discussed all the patterns. We requested inverted hammer, bearish engulfing, evening star, dark cloud cover, bearish harami, hanging man, hammer. And the last one you discuss is bearish marubazu. Bearish marubazu is a very strong candle, bearish candle, not having any lower wick. Like this fellow is a bearish marubazu here.
No lower wick.
No lower wick.
Can it appear? When does it appear?
It
Close
can
to
appear
resistance?
anywhere. It can, like this one is a bearish marubazu in front of, as we speak. As we speak, yesterday is a bearish marubazu. Beautiful example after an uptrend.
Okay. So the Marubazu is the only one that we look at and go, it doesn't have to be in an uptrend or downtrend because okay.
It can appear at the middle also. It can appear at the middle. Like this is
anyway,
a
and
downtrend. Like this is a
so,
downtrend, and this is the start of the downtrend. So this is a downtrend, and this is the start of the downtrend, and Marubazu appeared here. And this can be a start of the downtrend. Who knows? This can be down start of a new downtrend. Yeah.
okay, so I'm looking at that, and why is it not a bearish harami?
You mean bearish engulfing?
Sorry, bearish engulfing.
Yeah, if you compare two candlestick, it is bearish engulfing. If you compare three candlestick, it is evening star. So all in put together. So if you compare only one, that's a bearish Marubazu. If you go to the second one, then it is a bearish engulfing.
Okay, so
If you go to the third one, then it will be an evening star. Very interesting.
okay, so all right, so I'm just writing that down. When I'm comparing to, and I'm going to try repeat this, and if I'm wrong, tell me. So when bearish Marubazu, when comparing to the first,
No, bearish Marubazu is a single, no comparison, or a single candle.
a single candle, okay,
If the single candle is big enough, red body,
okay, that's right. So it's got no, when comparing to single candle, and appears with no lower wick.
that's correct.
Okay, now that's making sense. Okay, so I'm going to go
This
BE
is a bearish
comparing
Marubazu.
to previous.
When you compare two candlestick, this one is an engulfing, bearish engulfing.
Previous. Come on, Andrew. Candle. Okay, and then B or EF, evening F,
Is if you
comparing
compare three of them,
to
then it is evening star.
two prior candlesticks.
Three candlestick, evening star, two candlestick, engulfing, one candlestick, Marubazu.
Okay.
So we discussed all of them. Do you have any question?
Do I worry about piercing?
Piercing is opposite of the dark cloud cover. So piercing is the opposite of the dark cloud cover. Let's see any piercing here. And appear at a support. Yeah, this one. So after a downtrend,
Okay, piercing.
after a downtrend and near a support, near a support, near a
After
support,
downtrend.
near, and the second green candle body must close above the midpoint of the first red candle.
First red candle. Okay.
Okay,
Cool.
just the opposite of the dark cloud cover.
Okay. Perfect.
Okay,
Perfect. Amazing. I'm really, really happy about this, and it's I'm glad I've been I've spent so much time this week after just really, really trying to focus and get myself across all this, and I've learned probably more this week than I have the entire time because I've been focused on it. But this just brings it all together. So awesome. I'm looking forward to next week and learning about. I'm going to call it Sakutia because I can't pronounce that surname. That name of. I think it's unit 2 that you opened up. So I've taken down some notes and I've got a bunch of questions on that. But we can talk about that next time.
Yeah, not a problem. Take care. Have a good weekend, and then bye for now.
And see you on Sunday.
Yeah, so I see on Sunday. I'll share the video with you.
Fantastic. Thank you so much, Pastor. Appreciate it.
Take care. Bye for now.
Bye. Bye.